Hi, this is Chuck Aller. Welcome to this week's Hidden Wealth Solution Review. Well, I want to talk to you about Washington's war on our wealth and the most recent changes because, folks, they're gunning for us. And I mean, they're gunning for us in a lot of different ways. Just this week, it was announced by Senator Wyden, who heads up the tax side of Biden's administration, looking for more taxes. You can thank for all these tax initiatives that they're looking to take against the makers, you and I, is to actually figure out a way to tax Roth IRAs. Now, think about your thinking there, folks. Something that was promised back in 1997 to be tax-free from that day forward is now under attack, just like capital gains, just like step up in basis, just like estate taxes, federal income taxes. You're probably your own state, for those of you that have states with state income taxes. Everybody's hungry for taxes, folks. And here's the reality. Don't buy the Biden lie of that administration that they're only going to raise taxes on those of us that have incomes of $400,000 or more, or capital gains of $1 million or more, or what have you. Because here's the reality. Motley Fool had a good article out this last week about why the wealthy don't pay high taxes. And it's because the ultra wealthy, or wealthy in general, that have worked hard and saved hard, like many of you listening, right? Wealthy, defined by those of you that have saved 500,000, $1 million or more, or have high incomes, 200,000 or more, you're defined as wealthy, right? It's because we are able to understand, especially the ultra wealthy, right? The big corporations that are, now being thrown under the bus about not paying taxes, even though they employ thousands of people and generate a number of other taxes, is because they have a better plan and better advisory, right, as it relates to the strategies that are legally allowed within our tax code, even better than those that don't really even understand our tax code that thoroughly, that sadly work for the IRS. So what happens when you can't figure out a way to get all the tax you had planned on? Well, you then have to start attacking the next level and the next level. And that's why they're now looking to go after Roth IRAs. Yes, you heard it here first. Peter Thiel, right, who created one of the co-founders of PayPal, had put his private equity stock of PayPal in his, I think it was like 39,000, the article went in Bloomberg this week. And it just ballooned, right, from 1 cent a share to whatever PayPal is today. And now it's over $5 million. And then it gave another laundry list of people that have got 10 million, 20 million. Well, folks, they're gunning for us. And I want to teach you, just like what Kurt and Sandy learned from the great state of Arizona just this last week with us, that having a mid-year, now think about it, a mid-year tax savings makeover is going to be vital, especially with tax rates on sale, because they're about to go off sale. And especially with what's been proposed with this extra $6 trillion plus of spending that they're still trying to negotiate through this first piece of this infrastructure bill as we speak today. But Kurt and Sandy learned this. They said, you know what, we hate the direction that our country's going. We're scared to death. We even consider moving out of the country. And we know that, like you talk about, Chuck, we predominantly, like many of our friends and family, have predominantly saved in tax-deferred 401ks and IRAs. And we've got about $1 million between us, and we don't need the income. We don't need the income, but see, folks, when they're now within a year of hitting this infamous required minimum distribution age, when we ran their mid-year tax savings makeover, it pushing them way into a higher tax situation by pushing them to a higher bracket. Now, 85% of their Social Security is being taxed. Now they run the risk, if they don't address these RMDs and these IRAs, they'd have Medicare taxes on their Part B and D. And then the big one is they didn't want to leave a big inheritance tax to their 2 kids and their 3 grandchildren. Well, they learned what I'll teach this Tuesday at retirementprotected.com, how to use the tax code, not dip into their own pocket to pay the tax, to untax these IRAs to Roth, and before these Roth rules potentially change, but use the government's tax code initiatives to cover the tax, to untax with what will be within a 3 to 5 year period, all of their IRAs to Roth IRAs, and at net zero tax. So imagine 0 IRAs, 0 RMDs, 0 inheritance tax. Folks, you work hard for your money. Let's get to work. Go to retirementprotected.com. That's retirementprotected.com, and take the initiative, right? The time to get a tax savings makeover done is a mid-year tax savings makeover before the changes, unfortunately, can't be changed back. Retirementprotected.com, retirementprotected.com.